So you've decided to purchase a home. The very first step that I recommend to all of my clients is make sure that you get your loan pre-approval as your very first step. The reason this is so important is because it puts you on that right step to get going and get the process started. You want to make sure that you do this up front before you start looking at homes in person, before you start looking for a realtor. This will give you that foundation you need to get going. When you get a pre-approval, you want to be looking at what you can afford and also what your monthly payment is overall, and make sure that you look at not just your principal and interest for that loan, but the principal, interest, taxes, and insurance, which is known as the PITI. Make sure that when you get a quote or a pre-approval letter that the bank or loan officer is not leaving that taxes and insurance out. Now, it's not going to be 100% accurate, but it should be fairly close. They can estimate pretty accurately on what that's going to cost. Also, make sure to work in any closing costs into that loan that you may want to put into the loan rather than coming to the table with upfront monies. Also, ask your loan officer what amount of money you need to bring in as far as the down payment goes. The difference between a pre-approval and a pre-qualify is a pre-approval is usually what they're going to do is they're going to go through the entire process with you. They're going to gather your W-2s, your bank statements, your other income forms. They're going to pull your credit and make sure you qualify for whatever loan programs are out there. If they don't do that, they really can't give you an accurate number for what you qualify for. A pre-qualification letter is kind of a basic form, a basic letter showing that you have looked into getting a loan, but it really doesn't give you in-depth information that you need to know whether you're really fully approved or you're just qualified. It's so important to get pre-approved up front because then you know what price range you're looking at, which areas you're looking at. You won't be disappointed later on if you find out that you really can't afford the homes that you were looking at up front. It saves you a ton of time. And if you end up looking at homes up front that are more expensive that you can't really afford, moving down to the lower price ranges can really be a hard thing to do because the homes at the lower price ranges aren't going to be as souped up, as upgraded, as big as the homes that you were looking at previously. So it makes the shopping a lot harder when you start out with nicer homes or more expensive homes or better areas than what you can really afford. Make sure you get that pre-approval up front from a good qualified lender that gives you all the information that you're going to need to make the right decisions.